Morning.
Hello, everyone.
Hello.
Hi there.
Good morning.
Hello, hello.
We have some new folks today we would like to get to know.
Yeah, I think Christina didn't get to introduce herself last time. How is everybody today?
Good. Sorry, I was a little late. My daughter and her fiance
Oh,
are
you're
just
fine.
leaving to drive cross country back to New York. They've been here for 4 months.
Oh
I
my
can't believe they're just
God.
leaving now.
I
Bye.
can't believe it. Oh my
So
God.
I know, and they're stopping in St. Louis. I was thinking, I was like, they're
Oh my
staying up.
God.
If you
Anyway,
need any recs, let me know.
okay.
Oh my
Well,
God.
you
They're
need
You
staying
got
right
them
by
for
the
4
arch.
months though.
They're here for 4 months. I know. It was great. It was, I would never get to spend that much time with him, you know. I feel really lucky.
Oh my gosh.
So, sorry,
That's so cool.
If you have to go and give that last hug, feel free to.
I did.
For real.
They're just
Okay.
leaving now.
Oh my God.
Okay.
Well,
So they're gone.
Awesome. Awesome.
we're
I
also
love
giving
it.
you a hug because I'm sure you probably want one right now. I would.
Jennifer, I do want your son today. So we will not your son is an SUN that I'm seeing behind
Yes.
you, not SON.
Thank you. It's gorgeous here.
That was a
Yeah.
transition. Yeah, I woke up to 3 inches of snow today. So slowly melting.
Different.
Wonderful. Well, listen, we have almost everybody. I think we'll probably have like 3 more people pop on or so. Quick housekeeping before we get going. I know there was a request to have the Zoom links inside the calendar attachments. So number 1, in your welcome, we did have a link to the overall calendar, which has a placeholder for basically every single session. So please let me know if you didn't get that in advance. And then what we will be doing is making sure that we get the Zoom links. The Zoom links you can access within the Mighty Network. So like if you go to where our cohort is, it's in every single event there. But just in case, we're going to also put them on the calendar attachments as well. So you can, is what email from my name, Christina?
The intro that you just said has all the Zoom links and calendar.
No, it's from, it would be from Jen, G-E-N at gen2.com. Yep. And so that would have the overall link, and just let me know or something if you don't see it. We'll make sure you get it. So we'll put the Zoom links in there. And then additionally, I hope everyone saw inside their session. Yesterday we have the session 1 recording and the deck as well. And we'll be doing that after every single session. We'll drop those in. It may be, there were a couple, let me actually ask you as a group. There were 1 or 2 folks in our last cohort who would have appreciated having the deck going into class, note taking, all of that stuff. Is that something that people here would find helpful? Is actually having the deck literally in front of them? I think we had a couple folks who really like to print things out. So let me know in chat if you would find that valuable. And I think we can easily do that. We obviously have the decks before class. So just let me know. And then very last, before Jags gets started, we have a couple people who didn't get to introduce themselves. I know Christina, you were not able to introduce yourself. Do you want to do a quick intro?
Yeah,
Yes.
and Christina,
Sure.
we are very interested in learning your why.
Mine?
Yeah, like why are you interested in angel investment? And so yeah, that would be great if you can also tell us a little bit about that.
Yes, sure.
So yeah, I won't take up too much time, and apologies for having to hop early last time. But my name is Christina Muller. I just moved back from Hong Kong about 2 months ago, settling into New Jersey, moving into our house this weekend. So this week's been a little crazy. And I work at a company called On Deck, which is very much sort of an education meets community. Yes. Currently incubating a program on private market investing, which is also the reason why I, was interested in getting to know, the group here, but also developing my own expertise within angel investing. I'm earlier on in my journey, I think, as compared to some of the folks that are in this cohort now. I've done a few investments from my time in Hong Kong, and most of that was really from knowing someone who was investing and sort of jumping in on the deal, if you will, and recognizing that I don't have a strong sort of true time-tested framework for evaluating opportunities, sourcing deal flow, and the like. And I spent the majority of my career in finance at BlackRock, resigned last year to take some time off, do some self-exploration. I'm not very good at that. I'm not very good at relaxing. And wanted to do something different and pivot. And I had toyed with the idea of starting my own company and how do I make my impact on the world. That's not the right time for me to do that right now. And so that's part of what is driving my why for angel investing, is that I want to contribute and be a part of, in a deeper way, things that I'm passionate about, and as it relates to education, financial education in particular, and other sort of climate related things that I'm interested in. And so if one of those ways that I can potentially do that is by helping others who are on that journey and starting their own company, whether that's from financial or mentorship or other, I want to be a part of that. And so that's my sort of a little bit of a background on my why, and why I joined this. I found Kate through a Slack channel, I think a startup Slack channel. At this point, I can't even remember which one. And I'm really excited to get to know the women here and just expand my network with like-minded, amazing, and ambitious women. So that's why I joined.
Christina, that was good. I lived in Hong Kong too for a few years, so we have to definitely, compare notes. But thank you for being here. Appreciate it.
Thank you.
Thank you for your
nice to meet everybody.
Do we have anyone else we
Awesome.
missed?
Not just yet. I know one person was going to maybe be a little bit late, and then I think there are two women who couldn't make the first two courses, and so I think we'll probably see them next Tuesday. So okay. we can dive in, Jags.
Okay, and Christina, were you here for a part of it last time?
Yes, I had to jump around 1:30.
Okay,
1:15 last time. So
we
I
had
missed the last 45 minutes.
Okay, sounds good. Thank you. So I just wanted to know for people who are here how much, and we apologize, Kate and I, that we had some internet issue and then the Zoom issue. So if you guys have any questions, we'll start from there from last time. Those questions you also can be asked during this session, because it's not just, okay, we passed this session, so we can't. So if you don't have any questions as of now, but later on, as we're going through this session, you say, oh, I had a question about this from last, feel free to interrupt, and we'll just jump right in answering your questions. But I had an opportunity, I was thinking about all you women yesterday, all of you, and I don't know if you guys got to see what I put in the Mighty Networks. I put something that I learned about each one of you, and I was really, really so excited that everyone here has a different why, but also has a common why, right? So the common why is obviously learning about the angel investment. But again, I want to bring you back to my quote that here we know how many seeds are in an apple, but we don't know how many apples are in a seed. So each one of you are going to go and beyond this class and your journey and I hope we all get to impact and remember our why as a magnet that pulls us to do what we need to do. So having said that, let's jump right into session 2. So the session 2 today, we are going to focus on attracting deal flow. So a lot of times I'm asked that I get deals coming to me, right? So why do I need to attract deal flow? And I'll give you a few examples of why we need to do that. Let me go ahead and share my screen. So, like a lot of you have this background in either financial services or technology or something else, that you have your own network or you're part of few networks and few communities. And a lot of the times you will see that the deals are coming to you from your networks. That's a great start. But then I want to take you guys beyond that and kind of put you in an uncomfortable space where you actually have to go out and source deals. Again, the diversity is the key here, right? Diversification of our portfolio. So if we are continuing to get the deals from our network and our community, that's not, we are attracting kind of the similar stuff, right? Who we are and what we are, doing. But if you want to go beyond that and diversify your portfolio even more, or even just to get to know what are other people who are not in my network, not in my community, thinking about, how are they getting access to some of the amazing deals. There is still a very cliquey culture in the the startup investment space, right? Most of the time, if a deal comes through to me, my first natural instinct is to, well, let me share with the people I know and people I trust and people I feel safe with, right? That, and if the deal is really great, the allocation is called for and it doesn't even go beyond that network, right? So, and that may happen to you as well, as you are either wanting to get into deals or wanting to have access to certain deals. My beginning part of my journey was always about being safe, because I was like, okay, I don't know if I know what I'm doing in angel investment. I'll just go with the people that I know who understand me, don't judge me, etc., etc. So that was 2013 or 2012 to 2015. That's what I did. I only looked at the deals that came to me through my referral, word of mouth, whatever, right? And after 2015, I'm like, okay, there's so much other stuff that I'm missing out on. How do I get plugged into different communities? So I started being part of, a lot of demo days, a lot of pitch competition. I put myself out as a mentor. I was also just talking to people that this is what I'm doing. I was no longer saying that, oh, I only do angel investment as a hobby. And that was my mindset. Now I was doing angel investment as a business. So that mindset is also important when you are putting yourself out there. So you have to ask yourself today, is this a hobby for me or is this a business? If it's a hobby, no issues, no problem, because you're still making an impact. If it's a business, you have to treat it like a business. You have to have an entity, whatever way you want to go about by setting up a legal entity, et cetera, et cetera. All right, let's dive right in. Interrupt me anytime if you have any question. You guys can see my screen? Yeah, okay.
Yes.
Perfect. All right. So a lot of the times, what is angel investing or early stage investing is believing in or valuing things that have not yet happened, right? And I even take this quote one step further, not just master valuing things that have not yet happened, but also master valuing founders that have not yet been serial entrepreneurs or successful entrepreneurs. And that's where most of the underestimated, again, I'm using the word underestimated, means women and underrepresented communities, underestimated founders are right now. Many of them are, doing this for the first time. So as an angel investor, you're mastering the art of valuing things that have not yet happened, as well as valuing founders that have not yet, have shown the success rate. Most, a lot of times I see that, even when the pitch comes, right? Oh, I'm a second time founder. I sold my company, the first company to Fortune 500 company, and whatever. So immediately we think that, oh, and there is a lot of merit to that, right? We think that, oh, this is a founder that knows what he or she is doing. But if we continue to just be in that space, we are still not, in my opinion, diversifying our portfolio to include the underestimated founders. So anyways, this is a quote from Mark Andreessen, who is, everyone knows him from A16 founder, Andreessen Horowitz. And I like this map, this quote that says that this is what I want to be thinking like. But I'm even taking this quote further and said, how do I also master the art of valuing founders that have not shown their true potential yet? So we went over this key players last time. Angel groups and VC are, some of the key players in this ecosystem. Angel groups have, syndicate model, and we talked about there are two types of angel groups. One is a membership based, and one is a management fee plus carry based. And the VC funds are, mainly carry based and management fee. And usually the VC fund lifetime is about 7 to 10 years. Around 5-year time, they are kind of already raising funds for their second or the next fund, as they are, winding down with their previous fund, because by that time they have invested hopefully into not only the initial investment, but a couple of follow rounds as well. And they probably have had a couple of exits. So around 5-year mark, 5 to 7 year mark, they go and start raising funds for their next fund from the VC fund. Angel groups is kind of like, evergreen, that they do work, funding per syndicate, right? And if you're a member of an angel group, you pay a membership and you get access to all the deals, and then you figure out how, which deals and how much, et cetera, et cetera. Some angel groups have a minimum and some angel groups don't. Obviously, Accelerator is a great resource for deal sourcing as well. Incubators and startup studios, corporation, venture arms. Like if you know somebody in your network who is working in an innovation group or venture group within a large corporation, I would definitely also connect with them and say, what are you guys looking at? What kind of deals are you investing in? And a lot of these people, publish their investment, right? Not probably right away, but they said this is what we are, this is what our portfolio looks like, right? So figure out what your thesis is going to be, and we'll work on that a little bit today. And then try to connect who is in your in this ecosystem, who invest in the startups that match your thesis that you would like to be part of, going forward. A lot of service providers, right? So a lot of lawyers, and the tax attorneys and the financial people are constantly giving advice to all startups, right? Because setting up a legal structure is the first thing. So they have access to this incoming, early stage startups. So if you have relationships with the service providers, that's also something that you can take a look at in understanding what kind of deals that they are helping set up. Crowdfunding platforms. My favorite crowdfunding platform is Republic.io, right? They are really going out there and helping startups, especially underestimated founders, raise money to kind of fill the gap where friends and family kind of step in. So there are a lot of crowdfunding platforms as well. Any questions or any feedback on some of the groups that you are currently associated with that you would like the rest of us to say, hey, check this out?
Hi, this is Laura. Oh, let me turn my camera back on, sorry.
No problem.
So I'm in the very early stages of getting to know some of these crowdfunding platforms, and I've also worked with corporate VC, and I am a service provider, so I do actually get a decent amount of deal flow coming in. But some of the crowdfunding platforms that I've worked with, one is called Our Crowd.
Our Crowd?
Our Crowd, and they mostly do medical devices, but they also do, you know, a variety of other things in the life sciences area.
Mm-hmm.
And they're interesting because they kind of vet the deal first and they become the lead investor. They invest the first $1 million.
Wow.
And then they put it out to the crowd, but they only accept 1% of the deal flow. And then I think I may have mentioned to you that I started working also with WeFunder.
WeFunder, yes.
WeFunder, and WeFunder is, I would say, a little bit more democratic, so to speak. So if you can get a lead investor, you can get on the platform for the most part. And then you just have to file your documents with the SEC, which they do for you. They make it really easy. So I just wanted to mention those two platforms.
Yeah, no, that's great. That's great. So, you know, looking at these two platforms, I'm sure we can look at some of the investments that they have made. And, you know, as you guys find, you know, concretize your thesis, it would be great for you to keep your list, like where do I go to see where or what else is happening, right? That's, thank you, Laura. Anyone
Sure.
else?
Yeah, this is Joan. I wanted to chime in. My my friend who's an angel really likes King's Crowd, which is frankly like a clunky form of Republic. But their goal is also later on to do qualitative and quantitative analysis across deals to look more at kind of more metrics, or they have a desire to do more statistical analysis on deals.
Oh, nice, nice. And do they publish that? Or
They will
will they
be.
publish that?
Yeah, they will. If you check out the website, they've got kind of a, and I assume Republic's going to do that in the future too. But I think it's just an interesting take on it.
Yeah, no, thank you for sharing that as well. Appreciate it. Yeah, so there are so many amazing, you know, crowdfunding platforms for sure that are out there. One of my favorite two of them are Seed Invest and Propel X. Propel X does all tech deals. And it is founded by a female, so I'm a little partial to that. But obviously, if the deal is not right, you know, I'm still going to look, but may not invest. But Propel X is one of my favorite, and Seed Invest is also a good platform. Yeah, I think that, you know, this is the beauty of a community, right? We can all help each other out in understanding what's out there. So feel free to, you know, as you go through this, put information in Mighty Networks or in our community to, you know, just bring attention for the rest of us if you come across something. As far as the angel groups and VC fund, you know, our friend Kate is, you know, does diligently, you know, Thursday demo days. So I really encourage all of you to, you know, attend that. And maybe I was thinking that we can, as a group, attend one of them and kind of look at what deals, you know, and talk about it. Perhaps, you know, we'll work with Kate to see which one is the one that we can all show up in. Yeah, so. All right, awesome. Moving on. This is where you will have to really, you know, sit back with either a cup of tea or a glass of wine, and, you know, when you have enough time to really look at what kind of investments that I want to be making? What is my legacy that I'm trying to build? How do I want to show up in the world as an angel investor? So there are three components when you're thinking about developing your thesis that I really focus on. And I am a what do you call the paper and pencil type of a person, right? So I usually either go and I do that actually once every 6 months, if not at least once a year, but my preference is once every 6 months. And I look back at the last 6 months or last year and see, where did I spend most of my time when it comes to being an angel investor? How much funds did I allocate, right? I know I'm writing checks. I'm adding that up on every deal. And what is the strategy that drove me to make these investments? So as you're starting out, even though you may have done 0 angel investment or 10, wherever you are, or even more, wherever you are in your journey, I really want to ask you that you look at the time you have right now that you can allocate looking at the deals. It is really, really time consuming. So I spend about 20 to 30 hours a week looking at deals that are coming to me and putting it in a tool called Affinity to kind of track my deals, right? And I always look at every single deal that comes to me. Either it's a cold email or warm introduction, or somebody just happened to say, hey, check out this, friend say, check out this website they're raising, let me know if you're interested, right? So whether it's a pitch deck or whether it's a website or whether it's just a area of interest, I spend about 30 hours a week because this is what I'm doing right now. As far as the funds go, my average deal check size is about 25 to 35,000. I've done as low as 15,000, and I've done as high as 100,000. So that's where I am. I'm now more focused in writing about more like $50,000 checks, because I feel that that's where the success that I've had with my exits, if I had really focused on putting that initial amount for a right company, my return would have been that much more. So now that I have experience in like, what am I looking for in companies, I'm now moving more towards $50,000 checks per company. I make about an average on 6 deals a year, on low end 4, on high end maybe 8. I do around that. So my average check size, I'm moving towards 50. It's a lot of money. I wouldn't lie to you. A lot of them it's going to fail, but I feel that I'm at a point where I can take that risk. So that's my strategy has evolved, right, over time. And the strategy around industry or sector. So I started out as generalist, right? The first 5 years I was investing in, a lot of tech companies, but a lot of marketing tech, a lot of, what do you call it? The medical tech, healthcare. But I realized later that I don't have any expertise in healthcare, and that's where most of my failure, not failures, but the companies that didn't succeed come from. But then I replaced healthcare with food, because I really am passionate about food, in a sense that food is something that connects us all life on earth. And I also invested in a couple of water companies. So it's like, so I'm like food and water, some cannabis companies, a lot of tech. That's where I am. And the strategy I use is that 75% of my funds are going to go into the sectors that I want to focus on: technology, food, and even technology. Voice AI really attracts me because audio is as human as it can get. It doesn't require any tools. Like if I want to write something, I need pen or paper or email or whatever. If I want to video something, I need tools. Audio is just, I can just speak, I can just express, right? So voice technology is I'm really attracted to that. And the 25% of my portfolio I allocate to something that doesn't fall in the 75%, but I'm really, really attracted to that deal. And I feel that that is serving my higher values or something like that. So that has been my journey in developing that thesis, and that's where I am. Having said that, like I said, you will need to sit down, and figure out how do you want to show up in the world as an angel investor. Everybody would want to pitch to you. Everybody would want to connect with you. On LinkedIn, I don't even say anymore that I'm an angel investor because I get deals so often and I don't have time to respond to all of them. So I kind of go back and forth on, do I want to tell the world on LinkedIn investor or not? So right now I'm looking for more deals from certain area of the world. So I put it as an investor, but if I'm not, then I don't. So you really have to manage, your time. And if you are working full time and you're like, okay, I want to be an angel investor, but I don't really have the 25 or 30 hours, you really need to figure out that why are you doing angel investment? Not to say that you can't do angel investment, but then there are other ways to participate. Like you can be on somebody's syndicate, or you can be part of an angel fund to start with, where you are not spending so much time, but the deals are kind of coming to you and you are as a group curating them. So you really have to figure out where you are in your life journey and what is it that you want to achieve from this, being an angel investor. If you're just interested in doing, one deal, I suggest you save your money. On average, you have to do 20 to 30 deals for you to actually get that, 10x return. So I'll stop and see if you have any questions. Yeah.
Jags, I just had one thought, because you've been doing this for years and years and years. Can you talk about, in that initial phase, how you, or if you feel like you could have done it better, how one might think about ramping up? So right now you're spending 20 to 30, you're trying to write X amount of checks a week, but let's say you were back at the beginning of your journey. What's a realistic way to think about time allocation if you're trying to be in build mode? So if right now it's maybe 1 or maybe 2 checks, but the goal is next year that doubles, how can they think about that?
Yeah, sure. The great question, Kate. And I have to say that even though I've made a lot of investments, I would say about 60 to 70% of them are have failed, and majority of them are actually coming from my early 5 years of investing, right? And even as an angel investor, you have to know that this is illiquid, right? You cannot just like a stock, like, oh, I'll sell it tomorrow if I need money, and there you go, I have cash. Real estate is the next more flexible liquidation, that you can sell it, it takes time, but you can probably get out it within 6 months. This is something that once you invest, you are locked in, right? Until for at least 5 to 7 years. So that should be the time frame you should be thinking about. So when you were, so initially when I started out, I was just so excited. I'm like, oh my gosh, I want to fund this person. I want to fund this person. I really like this. And I was writing checks, not more than $10,000. But I actually, in the first year, I probably wrote about 20 checks. And I'm like, oh my God, what am I doing? That's $200,000. What am I doing? So one thing that if I were to look at my younger self, I would say that, create a process or a framework that speaks to you. As far as, you're going to learn things in this class, but there's so much more information out there in the web. Reach out to the people you know, create a framework saying that I am going to look at this many deals in this sector. Put some structure. I did not put structure earlier on. I was more emotionally involved. And it's okay to be emotionally involved, but then when you have to write those checks and you don't see the money coming back in, you're like, okay, what did I do? right? So have a structure, have some sort of framework, and pay attention to the founders more than you would pay attention to the idea. And the reason I say that is that, and I'm not, when I say pay attention to founders, I'm not saying that go and only invest in founders who have had success with their previous company or whatever. There are three things that I pay attention to now, which I didn't do earlier when it comes to founder engagement, right? I like to get to know founder a lot. So when I'm talking to them, I want to know how is a problem is something that they are, the solution is for. What percentage of the population does it relate to? So if I were to invest in another food delivery company in San Francisco Bay Area right now, would be not such a good use of my money, because there's so many, and it only affects 5 to 10% of the population. But if I were to say, the company that I'm currently looking at, Heirloom, which will also look at the deck, they are in a legal tech, and they are actually helping keep the businesses stay open. So that is something that I'm interested in. So what percentage of the population does it actually help, and what does it mean? And is this the founder created problem, or is that a problem that it really exists? And there is a not only product market fit, but in earlier stages, is there a founder product fit? Does the founder have enough knowledge in the industry or the sector they're trying to create the problem in? So those are a couple of things that I would tell my younger self is create a structure, some sort of structure, but they know that it's a structure that keeps evolving as you mature in your journey. Second is not write checks right away, get to know the founders and understand the problem, and understand, is this the problem that founder is in love with, or is it really a customer pain point? And then the third thing is that focus on returns, right? Because as an angel investor, if I don't focus on returns, it limits me to make more investments in the future. And that kind of ends my impact on founders. So I do want to make money, and I do want to focus on returns. Just because I'm impact minded or I want to see more women doesn't mean I'm not return focused. So those are the three things I would tell my younger self. I hope that answered your question. Good, are we good? Anybody has questions? Okay, so we talked, please feel free to interrupt me, because I feel like I'm just talking, and even though I see some of your faces, I feel the most of my screen is covered by the presentation. So if you want to unmute yourself and say something, please feel free to, you won't be interrupting me. So there are two main buckets as far as the deal sourcing that we will be, looking at: direct versus indirect, and referred versus unreferred. And from this, you probably know what we're going to be talking. I will dig deep into it. Direct versus indirect is directly in your circle of influence, or is indirectly coming to you because of the sector you're interested in. Referred versus unreferred: was it referred by somebody you trust, or was it unreferred, for example, on LinkedIn, or just from a demo day you happen to attend, or you were on a panel, or you were you're part of this accelerator as a mentor, and somebody said you should go and look at this deal. So these are the two buckets, most of the deals to me, that come to us. So here are some examples of direct and indirect, right? So we talked a little bit about their professional network. So Laura mentioned that she is a service provider. So that's her professional network. Christina said that she was part of BlackRock, and now she's part of OnDeck. So OnDeck, is a great network as well for founders and for investors. So that is their professional network, that a lot of the deals that they probably see are going to come through. Obviously, friends and family, right? This is my nephew who is, you're my best friend. My nephew is making this startup, and I know you're an angel investor. Will you take a look at it and invest, right? So that's friends and family. I would be really, really strict about friends and family, because it's easier to say no upfront than to invest and things go sour and then you lose a relationship. You could just, and the way you say that is that this is not the sector. If you're not interested, this is not the sector I invest in. However, I'm happy to take a look at the pitch deck and give my feedback, unless it's your daughter, which you always support. Anyways, demo days, we talked about mentor relationships, panels, contribution, alumni groups, like, Laura is part of NYU, right, Laura? And I went to NYU.
Yes, definitely.
Yeah. So I know there's Harvard Angels, NYU Angels, and so go back to your alma mater and see if there is some activity there and what are they investing in, or what kind of deals they are looking at. So there's a lot of pre-work you probably have to engage in order to understand what kind of sector, what kind of time I want to spend, what kind of money I want to write, and some of them may have a minimum that your minimum is 25,000, and you're like, okay, I'm just starting, so I don't want to do that, but I'm interested in knowing what they're doing. Indirect LinkedIn innovation newsletters, industry newsletters.
Jags, I'm sorry, I have a question.
No, please do.
So demo days, like, how do you get to go to those?
Sure. So you can definitely go to the demo days by Women 2.0. They have every Thursday, but there are other demo days that let me see when the next 500 startup demo days is, the other accelerator demo days are, and then see if I can get an invitation for our group to go attend that. But the way you would do it individually is just reach out and say, I'm an angel investor. People want people with money, especially accelerators, right? There are some accelerators that are like very exclusive, like YC and 500 startups. They don't just invite anybody. And that is something that, it's good and bad, right? But in LA, if you're interested in going to Techstar demo days, there's a Techstar demo days. You can just email them saying, I'm an angel investor. I'm interested in this. Can I attend your next demo days? Please let me know.
I never even heard of a demo day.
Yeah.
I guess I don't even can you just give a high level of what would happen
I
there?
can.
Yeah, Kate, why don't you?
Or is this out of order? I'm sorry if it's out of order.
No.
Totally in bounds, and actually a great question. So demo days is a little bit of this catch-all term that people use. Normally speaking, it's following like an accelerator program. So these accelerators have spent, 3 months or something with a handful of companies, and then they host a demo day to showcase their companies. Ideally, obviously, they have equity in the companies, normally speaking, but their big goal is to get investment into those companies. Nowadays, there are like funds who do demo days. There are organizations like we call them pitch sessions. So basically what it is founders pitching to investors. They're normally open, but the idea is to get investment dollars. And so being able to attend them is a little bit across the board. Some are like come one, come all. YC, for instance, is very exclusive. And so part of also signing up for some of these innovation newsletters and following a couple of these folks on social media and getting tapped into the ecosystem, you'll start to see them from various groups. So they're called like founder showcases, demo days, pitch days, something in that realm. So
yeah, and this is a great intersection. Kate, can we as a group attend next Thursday's demo day with you?
Yeah, everybody can attend them. So Carol.
We lost you. Hello?
You can just sign up. I think I'll just take it. You can
As
just
a
sign
frequent
up.
attender
on
of our
the
pitch session. Next week we have, yep, and next, I'm a little, it's telling me my internet is a little unstable on my back. Okay. So next week, I think we have digital health. It's not quite deep health, but it's, we've got some cool companies. And I think the week after that, we're doing a little deciding right now. It's probably going to be somewhere in like the future of work, just because we have so many companies we have to get through for there. But yeah, I'm going to put this in here right now. And then I will keep this group in particular updated on that schedule. So we can either go next week or the week after, whichever.
And the timing for that is complimentary.
It's literally, it is. It would be going from this Thursday session straight in. So it's 2 o'clock Eastern every Thursday. So yeah.
Okay, so I think that's a great, if you guys have time on your calendar, we could as a group attend that. And then maybe on the Friday session where we do office hours, we can actually talk about some of the startups that you saw. And, you know, I'd be happy to answer any questions that you have is like, how do I go about going to the next step? And by that time, you will have gone through some due diligence and financial statements and things like that. So it would be actually a great way to, you know, in the middle of the cohort to say, okay, let's go see some deals. And we can do the same thing the Thursday after if you like. Yeah, so let's definitely do next Thursday, whoever can make it. And we can sign up here, right? Kate sent the thing. Okay, sounds good. And
you.
Laura also
And
put the other one.
Laura, yeah, just a small note, Laura, I'm seeing your note right here. We did take this week off. Every once in a while, we just need like a little bit of a breather. We've been going since January.
Oh,
So we
okay.
took this week off. Yeah, but we'll have it next Thursday and the Thursday after anyways. So
Okay, great.
and then just go and go and go. So
Awesome.
Yeah. And, you know, and even beyond this class, if you guys are like regular attendees and you want to continue to have some sort of connect every Friday, we can invite people from other cohorts and we can just answer questions. I'm open to doing that too, just so that you guys feel that you're supported in your journey. Everyone wins. So we'll talk about that. Awesome. Thank you. Thank you, Kate. Okay, so Jennifer, so I hope that answered your question, and I'm happy to. Okay, good. So this is where you know, I get most of my deals right now, right? A lot of the times the referred deals take a lot of my time as I'm more and more into getting deeper into the network, that I get like, okay, angel friends who are investing, co-investing, or the founders that I worked with, you know, and demo days is a big one for me. And unreferred, I don't even look at AngelList anymore, Gust. I do look at Let's Venture and Propel X sometimes. So that's where 20% of my deals come through. And Let's Venture is an AngelList of India. So I am obviously, I'm Indian, so I'm interested in being part of that ecosystem, and Propel X because it's a, you know, pure tech deals. So this is where most of my deals come through. And you know, it would be really good for you guys to also, as you progress through time, to see where are your most deals coming through, and out of those deals, where are your most you know, successful deals, right? And just to have kind of quantifiable story to your angel investment journey. So this is where, these are the 3 steps, right? The startups apply either through demo days, or when I say apply, there is not a formal application. They either reach out to you, or through demo days, or the other things that we talked about, they connect with you, right? What I do is I have a filter. What does that filter look like? The filter looks like, my thesis is my filter. Does it fall into X, Y, and Z category? Yes. Then I say, okay, I'm interested in seeing your pitch. If it doesn't fall in, I always send a nice email saying, unfortunately, I'm not investing in this sector. I wish you the best, right? But always, always respond, because you never know. In an entrepreneurial journey is pretty lonely and pretty hard, where every email that they send out, there's a lot of hope attached to it. So I just like to make sure that I, do my part in replying to them and letting them know. And they actually really, really appreciate that nobody tells us if they're not interested. Thank you for telling us why you're not interested, but also telling us why you are not interested. Not just not interested, but why you're not interested. So my thesis acts as my filter. And then another filter that I have is how much money is left for me this year, right? If just because I do 25,000 or 50,000, doesn't mean if I come across an amazing deal that matches all my thesis point, sometimes I'm just not able to invest because I run out of my budget, my money. So that happens, right? So those are some of the filters that I work through, but the thesis is the main one. And always know that if you feel like, oh, I got to get on this deal, this is the best deal, there's always another great deal. So unless you're feeling pretty solid and it matches your thesis and stuff, you will miss out. And, both ways, like you'll say, oh, I should have invested in that, in a startup, or I'm so glad I didn't invest in that startup, because this is the lifestyle, right? You'll miss out on some, you'll be glad you didn't invest in some, and then you'll make amazing returns in some. Most of them will fail. Then you look at the pitch, right? So when I work with founders, I tell them to have 3 pitches. One is a 12 to 15 minutes or slides pitch that has 7 factors, right? So every pitch you look at, you have to, the first pitch deck, 7 factors. What is the problem they are solving? What is the solution that they're proposing? What is the market size? And here, we'll go into this detail about the market size. So the market size, the way it works is there is a total addressable market, which is known as TAM. The second is SAM, serviceable addressable market. And the third bucket, with the most important, is serviceable obtainable market. What a market that I can actually realistically obtain from now till the next 3 to 5 year plan. The fourth is the competition. Who is playing in this area? So whenever a founder says, oh, there is no competition, I never believe them, and neither should you, because there's always competition, whether it's exactly the same or 80% same, but there's always somebody doing something similar. And the 5th slide is, okay, now I know everything about the problem, solution, market size, competition, but why are you different than the rest of them? What is your defensibility? What is your moat? So that's the 5th one. The 6th one is a team, right? Founder market fit, founder product fit. Why do you feel that you guys are the one who can solve this problem the best? And the 7th is, what are you asking me? So I look for that first pitch deck. And if this doesn't have the 7 components, it's not automatically no, but I'm more, if I'm curious about the problem and solution, I reach out back to them and say, can you provide me with this information? And when I work with founders, the second pitch deck I ask them to prepare is everything about go-to-market strategy, revenue model, business model, financial forecast, month-over-month growth, your customers, references, etc. And the third set of pitch deck is everything and anything related to you, your competition, everything about your company under the sun, which acts as a repository. So I really take in the due diligence, start from the first pitch deck and move towards the second pitch deck and understand all that stuff. And we'll go through all that. So don't get overwhelmed. I'm just trying to give you an overview of what are the 3 phases. And obviously the last is the investment decision. Am I writing the check? Am I not writing the check? And even more important behind the scene is that how do I want to get engaged with that, right? Engaged with the startups that I've invested in the future. So that will also come into the 5th or 6th session that we're going to be doing. Any questions on this slide? Okay. I can't see you guys, so please speak up if you have questions. So these are the 7 must-dos, right? Some of them we kind of talked about. Stay in touch with active investors in your industry. Even if you're starting out, I know that there are investors who would love to just have a 15-minute chat with you and tell them, talk to you about their journey. So, don't be afraid to reach out to people you don't know, right? And expect no, but there once in a while you do get to meet somebody who is awesome and you develop that relationship. Build relationship with your co-investors, right? So if you are part of a syndicate or angel group, understand who is investing with you, what else they are looking at, who is in their network. Stay in touch with companies and founders, right? I say watch list. So if I have a company that is really, really early, I love the idea. It has every ingredient, it matches my thesis. I can write a check, but they're just too early. Like when I say too early, is there at an idea stage, right? And most of them are idea stage or pre-revenue stage. It doesn't scare me that much. With the idea stage, I'm like, okay, I like this idea. I'm going to put them on my watch list, and I communicate with them that I want to see more traction as far as your product development or your customer acquisition, or even if it's a little bit of money. I want to see that there's somebody out there willing to pay you for what you're creating, right? That's the ultimate test. Follow certain people on LinkedIn and Twitter. I am really, really not good at social media. I'm going to put it out there. So this is number 4. It's been my must do forever, and I'm improving, but I'm not there yet. Attend demo days of top accelerators. So that comes by, building relationships and saying that, I want to be invited to this because I'm interested in this thesis, in this sector, and be prepared to talk about your elevator pitch, right? What is your elevator pitch? I am interested in coming to demo day of your accelerator because blah, X, Y, and Z, right? And we'll work on that as well. Develop how can I help you attitude and persona. So it's not about what can you do for me, but how can I be of help to you, right? Knowing that you're not going to invest in every single company that comes to you, but you can always help them somehow in either connecting with a person in your network, or just listening to them, or going through there and giving them your feedback on their pitch deck, right? So how can I help you? I think that is something that I love doing that, and I'm so glad that so many relationships have originated from just this simple ask, or some simple connection. So I really encourage you guys to try that. Manage it like a project, right? Time, schedule, resources. Do we have something in the chat? I see something. Let me see.
Sorry, I don't like to interrupt you.
No, please do. Please do.
Oh, I just was asking if any of you have worked with Golden Seeds as a co-investor or joined Golden Seeds, and what your thought is on it.
I'll go first. I came across Golden Seeds about 6-7 years ago, and I decided not to be part of that because I'm telling you this based on my experience then, right? Not what it is now. So please take it with a grain of salt. That I felt that it was still very cliquey, which I was trying to get away from the clique in this in this ecosystem. I felt it was a cliquey with women, and I did not fit in. And the second thing is that they just take way too long to make decisions. So I don't know if anything has changed now, but that was my experience then.
Yeah, and I'll give a little experience too. And I'll say this out of like a deep level of respect for Golden Seeds. They were literally pretty much the first group of women almost 30 years ago now to start gathering women to invest in women. And it's amazing. And they're absolute pioneers in this. A couple of things, their speed is really kind of prohibitive. And we've also talked to a ton of founders who've just tried to go through that program and their due diligence process. And I sometimes fear that they're missing out on deals because of the length of their due diligence process. And they have. I've known companies who've closed their deal and they're just still waiting to kind of get through golden seeds. So I have a concern there. I would also say they tend, when it gets into the space of like, and I'm going to use this term really loosely, but you're sort of like Silicon Valley type startups, high tech, SaaS, that type of thing. They are not very experienced on those types of deals. And so they kind of have these buckets that they feel as a group very comfortable with. And they, it's taken them a bit to expand from that. And I think they're definitely still like in expansion mode there. So a couple of things about that group, but you know, take that also with a grain of salt.
Yeah, and another thing that I had heard, which that they won't even look at it if you're not $1 billion serviceable, addressable market, right? So they, to me, they are, you know, it's a great data point, but shouldn't be a filter. But again, you know, I'm biased, but I totally agree with Kate that they are pioneers and they do have amazing connections and network. And they could do a lot of, you know, they already have done a lot of good in this space and they continue to do so.
I
And
think
I
they
don't know-
also require a minimum revenue threshold before they'll consider a deal,
Yeah.
which means you can't be too early stage.
No, and they are, I know for sure they're post revenue. So they are definitely looking at that. So yeah. I don't know why now all of a sudden I'm not able to, I have stopped sharing for some reason. Okay, all right. Can you guys see it? Okay, perfect. Okay, I can't see it. Hold on one
No, we
second.
can't see it.
You can or cannot?
Cannot.
See that you've started, but not anything that you're doing.
Oh, God, hold on. Sorry about that. Yes, now?
Same.
Same. All right. All right. So let's answer some questions while I figure this out. If you guys have any questions that you share. Now?
There we
Yeah.
go.
Yes. All
that's
right.
good.
Just was not pressing the right buttons, I guess. Okay. So in the last most important, right? Manage it like a project. If it's a hobby, make it a hobby. Then, and if it's a project and you're really after making some good money, some serious returns, as well as, you know, making an impact, must manage it like a project. And, you know, we all have our own ways of managing project, right? Even though I say manage it like a project, that doesn't work 100% of the time for me. So I also have room to improve here. All right, so these are some of the demo days that are popular that you could look into. You know, I know I can get a couple of, you know, Women 2.0, obviously. I can get an Invitation Adventure University, and I can also get Pair invitation. I can get 500 startups invitation. So let me work on figuring out when their demo days are next. And I will send out an what do you call a meeting holder or an invitation to all your emails. So you guys can, I don't know if it's going to be within the month that we are together, but even after that, I'm sure we can, we can connect on any demo days. And if you guys hear about any demo days from your area that you feel that, oh, we need to do this, then let's add them to this, okay? The angel groups, obviously, also the Let's Venture, Band of Angels. I'm also part of Band of Angels. Band of Angels is the oldest Silicon Valley angel group. I think they are been around for 35 to 40 years. So I'm part of Band of Angels. They're based out of South Bay, Silicon Valley, San Jose area. And yeah, there are other venture groups, angel groups. We mentioned some of them as well. So you guys can check out this, their website and see when their demo days are, or can you be invited to those demo days? And we talked about the 3 stages, right? So let's dig deep into it, right? So and I mentioned that my filters are my thesis, and my another filter is what is remaining from the budget allocation for this year, right? I always find myself struggling in the last quarter because I already, I came across, companies that I wanted to invest in, and sometimes I'm like, I'm done. So another thing I also do, which comes with building a relationship, that if I really, really like a company, right? I tell them that, yes, I'm interested in investing. I'm interested in, I'll sign the paperwork and the term sheet and everything. However, I will not be able to wire the money until when I have it available, which is within 3 months, right? And and I only do that if I know that the founder is not depending on my 50,000 to actually survive. If I'd never want to put founders in a position like, oh, they're so desperate for money, but they don't have money, that right now to go through next 3 months. So I don't even ask that question. So the one of the startups that I invested in called Unimart, last year, it was in November, they were raising a lot, it was a really attractive cap, and they were already revenue positive. And they were, their round got subscribed like within a week, right? They were raising $1.5 million. So then I said, hey, I want to invest, and I totally believe in this e-commerce company, what you guys are doing, and I think there's a great need for that. I love the founder. So it checked all the boxes. And I'm like, are you okay if I send you the wire in a month? And then I was very honest with them, and they're like, okay, why? I'm like, this is where I am. I either invest in now, but wire a month later, or I don't invest. And I always, because of how can I help you question that I start with, they already have found me very useful, right? So they're like, okay, we could do that. We have about, $1.45 million in the bank, and we're revenue positive. That's not a problem. But I don't ask that question if I know that the founders really need this money. I don't even go there, no matter how much I like the company. So that's one of the things that
Sorry, when you say you don't go there, does that mean you don't invest, or you don't ask the question?
I don't ask the question, and that sometimes leads to me not being able to invest.
Okay.
But the most important thing is I don't ask the question, because I don't want to put them in a situation where they really like me. This is what I tell them. I really like your company. I'm not able to invest right now because I've already have invested in X number of companies, and my budget is called for. However, I'm so interested in learning, staying in touch with you, and maybe in the next round, if you could let me know, I would be more than happy to be part of this company. So in the next round, it's usually, in early stage, it's 12 to 18 months down the road. Yes, the valuation is going to be higher, but it also gives me more confidence that they have been able to go through this 12, 18 months. They have met their milestones because I already know what they were going to work towards, right? From the last pitch or last race. So it gives me more confidence that, oh, they are going to be able to, this is the company I want to be part of. And let's say they did not do that. It also gives me another opportunity to not be in a company that I thought was good, but, not, they don't know how to manage their money, or, something happened. The founders split. Life happens, right? It's not like getting a check is the beginning of a lot of other things. So that's how I stay in touch with them if I'm really interested in a company.
And Jags, there's something interesting here to just talk about for 2 minutes too, because you're talking about founders who might come across as, oh my God, I need this money like tomorrow. But I think, at least I'm of the school of thought, that that is not a red flag. Some people think it's a red flag, and it's easy to have it seem like a red flag. Can you talk through for a minute the reality of being a founder and what it means for that early check, and like why sometimes it can be urgent?
Yeah, sure.
And also why that's okay. Like how?
Yeah. So that's a great point, Kate. So yeah, I don't look at it as a red flag either. I just don't ask them because I don't want to put them in a situation where they really want to work with me and they have to say yes, but they really need the money, right? So that's why I don't ask. But this early infusion, right? The early stage startup, and that definition, by the way, is also changing, right? Depending on what sector you're in, what industry you're, investing in. So, for example, if it's a software company, SaaS company, there is a relatively low overhead versus a food company where they actually have to pay for the ingredients, packaging, co-man, supplier, all that stuff. That's like the money that they have to give it to somebody else in addition to, the overhead that they have for their company, right? So when a founder says, I need this money tomorrow, and so it's not a red flag, first of all, but I do want to understand that why did you wait until now to raise, right? So also one of the things that I work with, I tell founders that 6 months before you need the money, you should be raising, right? And you should have a runway of 12 to 18 months. So if you come across a founder that says that, I'm going to be raising in 12 months. You want to be like, okay, it's going to take 6 months for you to raise. So you just finished raising, and now you're only going to dig deep and dive into building your company for 6 months, and then you're going to start raising again. So I usually go ask them to raise about for 18-month runway. So when a founder comes and asks me that, oh, I need the money tomorrow, I want to understand what happened. I want to understand why. And if those reasons are valid reasons and, make sense, then I'm happy to connect them with other people who can write a check tomorrow, because I have that trust relationship with them. And I can say that I'm not investing because I either ran out of my budget or whatever, but I think this is a great fit for you, and I can help you do the due diligence if needed with this founder. And so I write a very personal email helping them if I believe that they need the money to grow. They also sometimes say that, okay, we thought that we were going to get this, the POC is just taking a little bit longer, right? Because when you are selling to enterprise companies, the sales cycles are so long, right? In the beginning, and those cycles are so long that sometimes it kills the company, right? So they know that the contract is coming, it's just not here yet. So they just need some money to keep going so they can get that contract, right? So there are different reasons why, I believe in founders that has no money left, but also believe that they can pull it forward. And there are founders who are like, oh, and you look at the financial statement, you ask for the financial statement, and you look at their statement, you're like, why did you have I totally believe in team building and everything, but I think we live in a world where we don't actually have to spend so much money to bring the team together and feel part of it, right? We could go on a hike, we could go play with puppies, we could go build sandcastles on ocean. Those are all free team building activities. But if I see a team building activity that costs $45,000, that's a red flag for me. It's like, no, you got to be really scrappy. At the same time, I don't believe that the founders can live on air. They have to take reasonable salary also. So there are all that information you get from the financial statement, that how are they spending money? Are they just really, really, thinking creatively about things that they need, or are they just going by the traditional way of doing things? Example, team building. Does that answer your question, Kate?
Yeah, it's perfect. And I think just to summarize, because that's how I feel it too, is like, don't look at their bank account right now to determine how they are using their money. Look at both their financial statements and, last year's whatever, and then also look at their projections and what they're using it for. That'll give you the sense of whether they're going to be healthy users of cash or not.
Yeah, and the past behaviors, when it comes to money, says a lot.
Yep.
So focus on how they spent money last quarter. Kate, are we recording this?
Yep.
Okay, perfect. Because I want to make sure that we don't have any hiccups there.
Yep,
all right.
You're good.
All right, sounds good. So that is the first stage. The second stage is about timing and screening, right? Identifying startups to invest in. A structured strategy that allows you to meet startups early. So let's say that you want to start investing in 3 months from now, right? That's when you should start right now, meeting the startups and understanding who's out there. I really hope that, especially for the first-time angel investors, that put yourself in a company of others, obviously through virtual Zoom meetings nowadays, and learn from them, observe, listen. How are these demo days? Who's asking questions? What kind of questions they're asking? Why are they saying that this startup is good? Set up some informational meetings. Do a lot of homework on how people invest, right? So don't go and write your first check as soon as you decide to be an angel investor. That's also the mistake I made. So, and that time in 2012, 2013, there were not that many, things that I could go to. And I was actually starting out in my journey, and there were not groups like this where I felt comfortable just talking about, I don't know this, how do I go about doing this, right? So I really, really strongly suggest that you give yourself 3 months to do a consistent homework, meet with few people, listen, learn, observe, and then say, okay, this is something that I want to be part of, and this is I'm going to go go about doing it. So and in the beginning of your journey, tell people that, hey, you're embarking on this amazing journey of being an angel investor because of your why, right? You all had an amazing why, and I'm really interested in seeing deals that either come to you or the companies that you've heard of that I might be interested in. And these are the 3 things that I am currently looking for, right? Put yourself out there. It doesn't matter.
And Jags, I just brought a couple of these things together too, and I mentioned in chat first that you have an open SPV you're leading right now.
Yes.
If anyone wants to get their feet wet, and then also our portfolio companies, and we're currently looking at deals for Q2, and we also have a couple of companies that we've invested in, which is a great signal for anybody out there trying to work with co-investors that are still fundraising. So those, and you don't have to do it with us. I'm just saying those are really great ways to get in, because you can basically lean on the decision-making and the work that some other people are doing while you're also learning.
Yeah, absolutely. Thank you for saying that. Yeah. So that leads me to my next thing, that if you do want to write a check and you feel that you're ready for it, go with the people, like if you know, like I have a syndicate open, Kate has, so we know the kind of background check due diligence that we do before we put our money into it. And you can, you know, come in and write a small check and be part of the entire process as well. So that's you know, also something that you can do. And as Kate said, you don't have to do this with us only, right? You can go out and go in your network and say who else is, you know, who is there I can trust and do this with if I want to write a check now. And a lot of the times I find this really interesting. I run out of money by October, but there's so many people, they're like, no, I need to invest before December 31st. What do you, because of the tax incentives or whatever the structure they have in place, right? So what I do is I find like, okay, I want to invest in this company. I can't because I run out of money. Here is somebody you can connect with, right? So there are also all sorts of people, you know, in the network that you can, you know, collaborate with. So quality matters, but so does quantity, right? We talked about this, the size matters, right? So if you're in it just to make a one deal, choose very wisely. Or, you know, you're one of the very, very few, like 0.1001% of the people who do one deal and that explodes, right? That is possibility as well. But for the rest of us, the quantity matters, the size matters, right? So if, you know, do it methodically, have a process, have a framework, figure out the budget and figure out your check size, and then understand that how many do I want to invest on a year-to-year basis. And the magic will start to happen when you hit 20 to 30 deals. The Bozo filter, right? I am not, so what is a Bozo filter? So some groups charge founders to pitch in order to weed out serious opportunities versus player. It cuts the deal flow in half. This is called the Bozo filter. I don't believe in angel groups. Like for example, Keiretsu. I have high respect for what they've done and the companies they've invested in, but they charge founders to pitch. And recently, I don't know how many of you are on a Clubhouse, but I am on Clubhouse almost every day from 12 to 1, talking about fundraising with a couple of other investors. And some founders came in and we focus on underestimated founders, right? The room is set up for them where they are like, you know, want to ask questions, but they don't know if they fit into certain groups. Some founders came and said, even on Clubhouse, people are saying that, oh, buy my book if you want a 15-minute with me. I think that is another version of a Bozo filter. I don't want to get associated with people who charge founders. Founders are struggling as it is. And it really cuts the deal flow in half, because if you have a founder who has an amazing product or technology or platform, whatever, and it could also turn people off. Saying, no, I have people wanting to be part of my my company. I'm not going to go pay. So that is my personal.
It also really cuts down on inclusivity. There are founders who literally, they don't have a bank account behind them to pay $150. And those are generally the founders that are already underrepresented in the space. Absolutely. So it's just all around a horrible,
So yeah, I would suggest that even though you may want to be part of these groups, just think about that. Does it align with how you show up in the world? And it's okay. I'm not saying one is right or one is wrong. But it's not in, it's against my thesis, my value. Key information, ask for key information from the founders, such as pitch deck, executive summary, cap table, financial forecast, burn rate, previous capital raised, pre-money valuation, founder profile, business model, competition differentiation, et cetera, right? So we kind of talked about this earlier, that there are 3 versions of the pitch deck, right? If it matches my filter and if I have the money, I ask for a pitch deck. And in that pitch deck, I look for those 7 things that we talked about. Executive summary is a nice to have, but it's not a must. As long as I get a pitch deck and I'm able to get on their website and do my own due diligence about the founder on LinkedIn, that's what I do at the first stage. If I'm interested in what theirs, then I ask for a pitch deck. And then if I'm even interested further in writing that check, then I get into the cap table, financial forecast, burn rate, how much money they have raised so far, what is the pre-money valuation, and we'll go through all this. So don't get overwhelmed. But I'm happy to answer any questions at any time. Business model, how do they make money, right? Competition, we talked about that. What differentiates them? What is their defensibility? What is their moat, the size of the moat around their, are they the leader or the fast followers? I usually have a preference for fast followers. But I also invested in, company that is, first. So the one company that I invested in is called Made in Space. We exited. And what they do is they take 3D printing to space. So instead of all this, when you go up there in the space and repair things, you don't want to it's very hard to take 20-foot robotic arm in space. So what they do is they make that 20-foot robotic arm in space, right where they need to be in order to fix that. So the name of the company was Made in Space. I actually led the syndicate. And 10 months later, we got acquired by a private equity company. And now that private equity company, I wish I had held on to those shares. Private equity company is doing SPAC. So now they are trying to take this company public through their SPAC. So anyways, that's my first. The second one I just did about 2 weeks ago is called Nautilus, which is building the ship version. Like we know what's happening in the Suez Canal right now, right? All these containers and the ship is stuck, and there's a big backlog on both sides, right? They're building planes to do exactly what ships do. I mean, they're the first one in this. They just raised $6 million. I did very small investment, but those are some of the ones that I've invested in last. Actually, Made in Space was a year and a half ago, 2 years ago, and Nautilus was just now, 2 weeks ago. So understand the difference between the first one versus the fast follower. And then the company that I'm excited to share with you today in Syndicate is also, I believe it's not a first follower, but it also industry that really attracts, not industry, but the type of thinking attracts me is that there's already a old way of doing it, but they're putting technology on it to make it explode. So examples, we all have examples of Uber, taxi was an old way, Airbnb, VRBO or vacation rentals were there before, but they kind of put a new technology spin to it, brought AI, ML, and now it's exploding. So that's the company that I'm going to talk to you in a little bit. It's always a good idea to understand the process, set a target time frame for each step, and measure both time and percent of startup that proceed through the funnel, right? So you really want to make sure that what percentage of the startup that you see that you invest in, right? I think somebody's, I don't know, somebody said that they, a lot of times they only invest in 1% of the startups that they see. Right, the most venture VC funds are around 1 to 2%. So they may be seeing a lot of deals, but they go through this funnel and then they come out investing in 1 to 2%. Other venture funds that I know of, they're also doing this, but only they only invest in 0.1% of the. So that is important. So where do you want to fall into, right? What is your comfort zone? Empower yourself to start asking questions like, what if, or why should I do this, right? One of the investors that I was talking to earlier in my journey, and he had been, a very mature investor, even when I started, he said that I look at every deal is, I look for all the reasons I should not do this. If I can't find a single reason I shouldn't do this, that's the deal I do. So that's one way of looking at it. And he's very successful. He's done amazing for himself. Build your tribe and toolbox, right? So this is, we talked about this, like, your tribe, who's in your tribe, founders, co-investors, advisors, mentors, role models, and what technology are you using to put yourself out there and attracting the deal flow? I'm still learning a lot about the right side of the screen, which is the social media and the, how do I constantly tweet or, put myself out there so I can actually attract quality deal flow. I don't think I'm at a point where I don't have problem attracting quality deal flow, but I don't, I know I miss out a lot because people don't know about, what I can bring to the table. So that's the phase I'm in. So even after being in this for 8 years, now I'm ready to put myself out there and help even, angel investors who are, next generation, if I can even call that, helping them be in this. Because if I help one angel investor and in their lifetime, if they help 7 founders and each founder then goes hire 5 to 10 people in their journey, I feel like I'm making impact. Keep it clean, keep it lean, delete, modify, add, share continuously, right? So that's manage your deal flow. We talked about this and we will talk about this even more detail as we do the due diligence, right? Problem, is it clearly defined? Solution, is it clear and realistic solution in the time frame that they are proposing? And what's the differentiation? What's the market opportunity? What's the competition? What's the team? What's the traction? Who are the customer? Who's in their pipeline? Who are already a customer? In which one of them are actually paid customers? And what is their LTV and CAC? So LTV is lifetime value and CAC is customer acquisition cost. These are 2 very important things when you're looking at the revenue model. We'll go through that later. But in short, what it means is how long will the customer stay with you? What's their lifetime value, right? So for the enterprise type of contracts, lifetime is at least 3 years, 3 to 5 years, because they don't change that frequently. But if you're looking at a CPG company, the lifetime value can be, very short, like maybe one time they purchase this and they don't purchase it afterwards. Or this is a subscription where the lifetime value, again, if the subscription doesn't bring the value, it could be reduced. But if the subscription brings a lot of value, it could go into multi-year. And the customer acquisition cost is how much did you spend to acquire a customer? How hopefully what you get in as revenue is much more than the amount you spent in acquiring that customer. Develop a hunter-gatherer mentality, right? As a human living in society which most or all of food is obtained by foraging, collecting wild plants, pursuing wild animals. When thinking about deal flow, remember that even more so than money, time is the most valuable asset, right? So the better prepared an investor is upfront, the more time they'll save filtering and triaging deal flow. So my daughter knocked some sense out in me a couple of years ago. She's like, Mom, time is not a renewable resource. Money is. So if you made a bad investment, it's okay. You learned from it, you move on. Because I think that one I had invested $100,000 and it just collapsed, right? And she's like, but time is a renewable resource. So what are you going to do next to make sure that you learn from this and, apply it to the other deal flow? I tell you, sometimes we learn so much from our children. Don't be this one. The one who lacks alignment on process and gating criteria, who ends up dragging their feet on investment decisions, rushing investment decisions, or leaving startups in limbo. There are plenty of people who do this. And, sometimes it just happens, right? You have all the good intention, but you just did not get back to startups. It's okay. But if consistently you're doing this because you feel that you're an investor and you have an upper hand, that's not a right karma. So I always think that, if you already have made a decision and you know the why you don't invest, then please be quick in letting them know, but letting them know in a way that if you want to stay in touch with them, please say that I'd be really interested in seeing what you're doing and interested in being part of next investment round, exploring the next investment round. So you're not telling them you will definitely be in, but exploring the next investment round. And if you're not interested in that, just say this is not in my, something that I'm investing in or will invest. I wish you the best. Take care. That goes a long way for people. Send a thank you note, set up initial connection right away, follow up with initial meeting within 2 weeks, and always send a next step email. One of the earlier lessons I learned regarding deal flow is that many well-connected investors will invest some capital in a venture fund or accelerator to either get first access to deals of their choice or an ability to make additional sidecar investments in any portfolio company. So one of the things that I did in the beginning is that I said, okay, I'll go be part of your syndicate, or I'll be an LP in your fund, just so that I know that you get a lot of good quality deal flows. So I want to see what you're getting. So that's one, basically you're buying your seat, right? And telling the person that you're interested in, being in their tribe. And additional sidecar investment. So what is a sidecar investment? So for example, if you're part of an LP, right? And the fund has already allocated all their money into X number of startups, and the kind of fund is done. An investment comes. And they really think that this is a great investment, but they cannot invest. They will go to their community to do a sidecar investment and say, okay, we can't do it, but we're offering to the people in our community because we believe this is a great way to invest in them. Most of the time they do it in a form of syndicate because then they get something out of it. But there are times that I've seen that, okay, we don't want anything out of this, out of goodwill, because you've been with us, we are offering you this deal if you want to make an investment. And they'll also give all the due diligence if they have done on any, and then available for any due diligence questions that you have. And again, if approved by GP, right? So GP is the person that approves the sidecar investment or not, because you really want to make sure that you're not pissing off your LP who are investing in this thing. Wait, I gave you all the money. I have trust in you and you're taking part of my carry, but you're not investing in this company and you're giving this opportunity to somebody else. So it has to be approved by GP. This is not something that happens. All right, so next session, due diligence. So I want to right now take you through this deal if you don't have any questions, or if we can take questions too. Sorry, I just feel like I go in 1,000 miles an hour, and if you guys have any
Jags, I just
Jag,
have a,
let's do a couple questions, and then also if it's helpful, I can talk through a little bit about how we do deal flow at the W Fund, how we kind of manage it too.
Yeah, but I think Laura, you had a question?
oh, sorry, I was just wondering, what are office hours? And also tomorrow is Good Friday. So are you still doing office hours tomorrow, or what's
I can, but it's up to you guys. I'm available. But we can also make it on next week if you guys want. I leave it up to you guys to tell me.
what do we do in office hours?
Any questions that you have that I was not able to go through because of either we ran out of time or we had internet issues, or you thought about
and good clarification. Yeah, good clarification, it is optional. So this is an additional place for you to come and pick Jag's brain and my brain. I can't make every single one, but it is totally optional. Oh my gosh, we talked about this. I totally didn't get it. Whatever.
Yeah, and we'll usually focus on what we've covered that week instead of going into the next week. So every week we'll have an office, office hours or something.
Okay.
I think we have some questions in the chat. Christina said, how do
Yep.
you determine what bets to make in VCs and or accelerators to get your seat at the table? I
Yeah,
think I
just to add on
observed
to
it.
that, sorry
Yeah,
to
sure.
interrupt. I had heard that like someone had quoted to me that, you know, the best LPs use the investment in the VC fund as table stakes. And I just want to explore that a bit more, to better understand, one, what that means, and two, how do you go about choosing the VC funds, particularly when some of them we may not have access to. And so then
Right.
how do you sort of go on that journey?
Right. So once you don't have access to, there's nothing we can do, right? I mean, it's their prerogative to like open it up or not. But just because it's no doesn't really mean it's no. So I constantly push, right? So I don't push to be annoying. I push to say, hey, I'm this, I can offer this, right? If you ever open it up to somebody else, please let me know. And I don't do that like every quarter, but I do it once a year when I send out, end of the year thank you, saying that, I want to be part of what you're doing. So, after 2-3 years, they kind of like, oh, it's you again, right? So,
And are you picking those funds that you're knocking on the door of that match your thesis?
yeah. So in my thesis, remember, I don't know if I say that, but it's a 75-25 split. So 75% of I'm, pretty focused on, but the 25% is like, I'm curious. So like space was one of them. I was never interested in space, but then I got interested in space, right? So I'm like, okay, I'm doing that. So that's one that falls into the 25%. So how do you determine what VCs, right? So I think again it goes back to your thesis, and second,
Yeah.
it goes back and then observe them, get to learn from them for 3 months, see what they're doing, look at their website. They're very good at telling the world what companies they have invested in, because they want to be out there saying we are investing in tomorrow's success. So do your due diligence behind it. Look in your LinkedIn network if you have a connect that can get you at least a first coffee meeting. And this is what I use. Doesn't work all the time, but I'll tell you my secret. He said, you must have heard that the VC industry, and this is how I start, right? Thank you for doing what you're doing, blah, blah, blah. And I know that the VC industry is currently going through a shift and encouraging more women investors to come on board, like you are. I'm really interested in entering that space. Would you have some 15-minute time to, talk to me? I don't do that as often now, but I did that a lot in the beginning, like 2 years ago, right? A lot of times they'll look at it and say, no, thanks. And a lot of times they don't even look at there, right? The GPs don't even look at there. So, but so once in a while you do get lucky and you do get a meeting with somebody. And in that meeting, you just, take them while you're interested, and also add that if there is an opportunity for being an LP, even though I can't be such a large LP, I'd love to do that. And as far as the fund goes, it doesn't really matter. I mean, Kate has a fund.
Yep.
Right? You can be yeah.
Yeah, and I'll answer this generally too. It's going to be a little one-sided, so take it with a grain of salt. But the reality is there are a slew of companies out there that would love to talk to LPs, and it's not because they're struggling. It's not that they're having a difficulty fundraising. It's because you're exactly what a fund needs to have is capital. So there's this set of kind of like exclusive funds that get picky, or at least pretend they're picky. But keep in mind, there are hundreds and hundreds of funds out there that would be happy to talk to you as an LP. And I would also say that in the quote emerging fund space, which is your new fund managers, fund 1, fund 2, they're smaller funds. Be open to those opportunities too. There's a lot of research that suggests their potential, advantages over larger funds. And then additionally, many of those fund managers have very solid investing track records as too. So you're not you are managing some risk, and all of those companies are like happy to talk to you. So, and then the second thing that Jags was saying, or actually it was the first thing, which is line it up with your why, is what are you looking for? Are you looking for a fund that lets you spend a lot of time with their portfolio companies? Are you looking for a fund that gives you deal flow? So as an example, deal flow is a really interesting one with funds. And so some funds, honestly, they're already out working so hard just to get their deal flow that your deal flow exposure is really just going to be their portfolio companies. So like really dig into what that means if that's important to you. Can you do some learning opportunities with that fund? Some funds, literally, you're going to invest and you're just going to sit back and get your quarterly statement. That's it.
Yeah.
And so is that what you want to get out of that fund? So really try to assess. And frankly, a lot of those exclusive funds that are hard to get into, you're with a bunch of LPs that are pretty much just there for returns, and you're not going to get much more than a quarterly statement. If that's what you want, fantastic. But so anyways, just like there's a lot of opportunity out there with funds. Yes. Joan.
Yeah. And just as someone who could be an emerging fund manager, we've been looking at how funds are set up. Like we've had access to PDFs and so forth. And one of the things that we've been seeing is there's like an active versus passive investor style that actually can be flagged as you are an LP. So like we have a higher minimum for passive investors, where you might have to pay a certain amount more and you literally get annual updates or whatever it is. Whereas active ones might be invited to events, be far more active in support of founders. So we've just seen different ways that that's set up on the fund side, that's so to speak.
Yep.
And,
and look also at,
sorry, I thought you were done.
Well, I was just going to say that reminded me too is to look a little bit too at models. So like we're on the rolling fund model, for example. There are a lot of rolling funds out there, and they let you invest. Well, some of them let you invest quarterly. We don't. We have like a 4-quarter minimum because we're trying to be slightly responsible with our LP money. Story for another day. But like you can also, that almost allows you to be like a little bit angel investee in your LP checks, where you don't have to write out $200K. Also, some amazing amazing funds like Portfolia, How Women Invest out of San Francisco. They allow women, because they're very focused on getting women investors. They allow women in at like 10 and 25K. I think How Women Invest just closed, so they're done, but Portfolio is like almost always raising. They're good friends, love them, fantastic groups. And if anybody also is interested in some of those emerging funds in a particular space, like I can very easily make intros or at least tell you what the funds are. You can do your research, that type of thing.
Yeah.
So
I think Beth had a question. What if you're an American in London, which is a great thing? You're having the best of both worlds. Does it matter if you're international? I don't know the answer to that question as far as the investment goes. We could take that as one of the questions we can ask and get back to you, but I think you should probably talk to the person who's doing your taxes or the CPA.
Yeah, and Beth, you should be fine because you, again, are an American. Like you have an American bank account. You should really honestly be totally fine.
Do I just invest in American companies, or can I say like, oh, this is a great company in London?
No, you can invest.
I think it's up, yeah.
I think it comes more problem will come when you get the K1s make sure you get the, whatever you need to file your taxes. I don't know if you have to file taxes in America as well as
I do. I have a lot of taxes.
Yeah, exactly. And then also, let's say you invest in a company and that explodes and you get exited, at that point, does it matter tax-wise where you are or when you made the investment? There are a lot of questions around that I don't know the answer to.
And just to add on to that, Beth, because my husband and I did an investment in a startup when we were abroad in Hong Kong with a group of angel investors, and Basically, we brought down our investment to make sure that we weren't 10%, more than 10% of sort of the SPV or vehicle that we were investing in, because that triggers additional tax implications and reporting. Couldn't speak intelligently about what those are, because we didn't want to have to go through that. So that's just something to be mindful of, is as an American, what percentage of the overall invested capital do you make up of the sort of the SPV and of the end company itself?
Like do well, but not like too well.
Well, you can. It's just a matter. That's just a decision to you to weigh
Yeah.
what the tax reporting implications of that are. So if you're, I mean, that was our first angel investment, so it wasn't worth it for us to take that on. We weren't ready for that step. So
Thank you.
Awesome.
Yeah.
So do you guys want to see the deal or that I'm looking at, or maybe Kate can also has any? I got to drop off at 11 no matter what. So I really
No problem.
Okay. So you want me to? So let me share this deal.
Although Jags, I will say too, is that we are doing due diligence on Tuesday. Oh my God, I'm looking at Heirloom too.
You are.
Look at that.
Yeah.
I sure
so-
am.
Yeah, so I'm doing a syndicate for Heirloom. I'm doing a 100K syndicate. I already have 70,000, so 30,000 left. So what this is an amazing founder out of Canada, and what they're doing is they're the GoDaddy of trademark. So every time a business registers, they go get a domain name and make sure that's all set, but they don't get the trademark because it's usually very, very expensive. And a lot of the businesses end up closing because they don't have the right trademark registration. So I'm going to send you this deck. We can go through the due diligence a little bit later. But here is the the problem that they're solving, right? More than 3,000 US businesses were launched. But out of that, only very, very small number actually trademarked in the right way. So an average cost of trademark infringement litigation is about 50,000 to 250K, and a lot of the businesses, they don't have this kind of money laying around for the litigation. They close the a business, or they're 46% are forced to rebrand.
I've had this problem. It sucks. It really sucks.
So she is actually a trademark lawyer, and this is so amazing that Kate and I are looking at the same deal, and we didn't know about this. See, this is so the great deal will flow somehow, right? Somebody told me this yesterday, and it took me time to think about that. It says wisdom is like rainwater. It always lies in the lowest area. So I would like to see that this is wisdom coming as a rainwater comes to like two people on this call who are looking at it. And anyways, maybe a bad analogy. Anyways, this is it's about using AI and ML to help businesses trademark their idea, their name, their slogans, whatever it is. Your average legal fee is about $2,000 to $4,000. What they do is for $99, right? So this is really, really incredible. So this is an example. So if you do a government search, right, for let's say NERCI, right? So then the government will say, yeah, it's okay, it's all clear to go. And then you go and you form that company, and like weeks and weeks after, it'll tell you, okay, you are not able to do that. While Heirloom does this right away, and it'll tell you that there is a similar trademark like Nike. So they're most likely you cannot register this name or a mark because there will be a litigation. So from their AI and ML algorithm, they're able to give you the dirt on trademark registration right away. This will be rejected. Let's say that you do find a trademark that exists, right? So the great big bean, this is talking about coffee. So if you file this application, right, this is a real example. You file this application, you're saying everything in here the way you were supposed to, that was rejected. But with the Heirloom Builder, it tells you exactly how you should prepare the application, and it prepares it for you, and there's a success. So I think there's a lot of value in this startup, and this is their business model with a 4.5x return on ad spend. That's really, really, really awesome. They reached 65K monthly revenue within 4 months of soft launch, and they're on track for 100K month over month. So this also is a big, validation that the problem that they are solving is really a pain point. This is the TAM, SAM, SOM we talked about. There's a global market. This is a 5 billion, the serviceable market, and this is what they're going after. And as I said earlier, this is for venture capital. Won't even look at the deal if it's not 100 million in the orange area. So they're comparing themselves with Uber in the horse and buggy market, right? So right now, this is how people can do trademark. These are the only, I think, two options that I know. Either you hire a law firm or you do it through LegalZoom, right?
And 2K is very small for that number. It's usually 3 to 5.
There you go. I didn't know that, but this is really, really, I think this is a great opportunity. There is a band of women from Shopify. They have formed a fund, and all 10 women, they're investing in this company. So they already have this amazing women-led fund, and they all are from Shopify, and they're now helping Heirloom connect to Shopify so that every seller on Shopify would need to do some sort of a trademark, right? If it's not their slogan or their whatever, the name of the company, their domain name. So they are actually, working with Shopify right now to have this available for their sellers. And I know that she also had a meeting with Amazon about this as well. These are the current services. So, again, looking at this deck, that this is what they're focusing on, but their vision is much broader. So that's what you also want, that you don't want to just have 1 or 2 products that explodes, but then 3 to 5 years down the road, there is no innovation thought process that brings in new products. Right. And they're also working with, I think, Google. There are a couple of people from Google actually left Google and joined them. So this also another validation as far as their talent that's coming in and how they are going to help grow this company. Initial focus on direct-to-consumer acquisition. And like I said, Amazon, GoDaddy, every time, when the business wants to start, they first check domain name. So if they can partner with GoDaddy at a first stage, that would be just incredible.
Hey, Jags.
Yes.
I know that you have a
Yes.
hard stop, and I think we've got a couple of other people. I wonder if what we could do is pop this into the, and it might be interesting to actually pop it into the full group. And we could actually just use the space.
Okay.
And we could just hash through some of this stuff.
Yeah, I love that. I do have to thank you for
that could be valuable.
So do people look at Mighty Networks? Is that the best way to post things? I hope it is. So we could commit. Yeah. Okay.
It's going to be good because it's got the thread and the chat feature, so we can just kind of like keep it contained.
Yeah, and the office hours are on tomorrow, so I'm going to be there. And if for any reason because of Good Friday you can't come and you have questions, I'm happy to hop on a call with you next week before Tuesday if it's urgent. Otherwise, we can wait until the next Friday.
And are office hours accessible through the same kind of Zoom? You have it in the calendar?
I think Kate
there's a calendar attachment. Yep, there's a calendar attachment inside Mighty Networks, and it also should be on a calendar, the actual calendar attachment that Jen probably emailed you this morning or something. Yeah. Okay.
Well, lovely
same, just
meeting
Zoom.
you again, ladies, and welcome,
Okay.
Christina. And I look
Thank
forward
you.
to seeing you guys tomorrow.
Cheers.
Thank you
Bye,
so
Take care.
much.
everybody.
Bye,
Thank
everyone.
you.
Bye.
Bye.